Most traders lose because they don't understand market structure. If you can identify higher highs and lower lows, you can stop trading blindly. In this video, I will show you the simplest way to understand market structure as a beginner. Before that, let's look at the things we are going to cover. Number one, meaning of market structure. 2, how to identify market structure on a chart. Break of structure, change of character or market structure shift. Common beginner mistakes. Simple beginner strategy using market structure. Let's now define what market structure is. Market structure shows the direction of price movement. It helps trader know the following. Let's write them out. 1, uptrend. Number 2, downtrend. Number 3, consolidation. Consolidation. Good. Everything in trading starts with structure. Let's do a kind of explanation. For uptrend, we have higher high and higher low. So if we are in uptrend market, you have market move this way, higher high, higher low, higher high, higher low, higher high, higher low. This is an uptrend market. It will be creating series of higher high and higher lows. This up here is the higher high, down here is the higher low. Up here higher high, down here the higher low. As you can see, it's breaking structure and closing above it, makes higher low, breaks the structure, then pull back again, make another higher high. So this is for uptrend. Let's look at downtrend. For downtrend, you have market move like this, lower high, lower low, lower high and lower low. Have lower high and then lower low, lower high and then lower low. So this is for downtrend. You have series of lower high and lower low. The next one is the consolidation or ranging market. That one you have price move like this. It goes up, returns to the same level, it comes down again, moves like this. It doesn't create higher high, higher low. It creates equal high and equal lows. So in this scenario, market moves sideways and buyers and sellers are balanced, as you can see from this structure here. This is for ranging markets, and beginners should avoid ranging markets. Let's move to how to identify structure on a chart. For you to identify structure on a chart, the first thing you have to do is to zoom out the chart first. Just like in this case, we zoom out the charts. When you zoom out the chart, you'll be able to see the chart clearly. As you can see now, we are having a series of higher high, higher low. Market moves higher high, higher low. It breaks this high again, creates higher high, higher low, higher high, higher low, and higher high here. It comes down to take out this inducement and touch this other block and move up to break this structure here. That's why we have this higher high and higher low, and there is a break of structure here. Let me zoom it out so that you can see it clearly. So this is a break of structure because markets took out this inducement here and broke the previous high here, forming a break of structure. And we have our full structure here, and this becomes our higher high, and this becomes our higher low. So this is for uptrend. So for you to identify the structure, first of all, you zoom out, then mark out the swing high, mark out the swing lows, then ask yourself, are highs getting higher, are lows getting lower? From here you can see that from this movement you have higher high, higher low, higher high, higher low, higher high, higher low, and higher high, higher low before this inducement was taken. You can see that the high continues. So that's why after taking this inducement and it comes back to take out the high that took the inducement, we can then mark this high that took the inducement as higher high, and the low that broke the structure, which is the swing high that took the inducement, becomes our lower high. So that's it. So we have, sorry, higher low. So that's just how to mark the structure. So and one thing you should know is that for you to mark out this structure, you start from a higher time frame. This time frame I used in this example is 4-hour time frame. So always use the higher time frame to mark out your structure, or you can go to the lower time frame and look for entry based on your strategy. So that is exactly how it is. We can look for another example and know if we can do for downtrends. From here now you can see that we have series of lower high and lower low. I've seen lower high, this lower low broke this one. We have lower high, lower low, lower high, lower low, and this lower high now, as you can see here, took out this inducement. From this high, it took out this low and broke this. So from here now we can have something like this. We have this as our lower high and this as our lower low, and we can mark our break of structure here since this broke the structure. Let me zoom it so that you can see it clearly. This candle closed below this low, so we can mark this as our break of structure. I'm not going to dwell much on identification of structure because this is just a beginner's class. In the next video, I'm going to explain and do multiple examples so that you can grab it. Make sure you watch the next video. Let's move to the next thing. The next thing is break of structure. A break of structure happens when price breaks a previous swing point, just like I've explained here. Here is a lower low. This candle broke and closed below the swing low here. The same thing applies here. Price broke above this swing high here and closed above it. So that's why we have break of structure here. That is how to know a break of structure. So we have bullish BOS, which is bullish break of structure. This one is example of bullish break of structure, and this other one here is the example of bearish break of structure. This break of structure can give you two signals. Number one, continuation. Number 2 is sometimes shows early trend reversal. It's either it is for continuation or it is for reversal. So let's move to the next thing, which is change of character. Change of character, written as CHOCH. Let me write it out. Change of character, CHOCH. This is how to write change of character, the short form. It can also be called MSS, which is market structure shift. Change of character is an early warning that trend may change. Example, uptrend suddenly breaks previous higher low. What we have here now for uptrend, if price comes and breaks this higher low and close below it, we will have a change of character. Then if price in bearish scenario, if price comes and breaks this lower high and close above it, it becomes change of character. So that's it. Let me use another example here so that you can understand what I mean. If we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, and all of a sudden this high comes and breaks this and close above it, this becomes change of character for the uptrends or bullish scenario. But if we have another example for bearish scenario, have lower high, lower low, lower high, lower low, lower high, lower low, and price comes to break the lower high here and close above it, we have change of character here. So that's just it. Once this happens, it shows weakness, that price is not able to continue in the other direction. So that is just how it is. And let's talk about the common beginner mistakes. Number 1, most beginners trade against trend. Then they ignore higher time frame structure, entering in consolidation, which a beginner is strictly advised to avoid, marking every candle as structure and overcomplicating charts. As a beginner, you can pay attention to this simple beginner strategy using market structure. The first thing you should do is, number 1, let's write it. Number 1, identify trends. Let's write it. Identify trends. Number 2, wait for pullback. Wait for pullback. Number 3, enter in direction of trend. Enter in direction of trend. Number 4, use previous swing low or high for stop loss. Use previous swing high or low for stop loss. Stop loss. These are some of the strategies the beginner can use when trading market structure. In the next video, I'm going to make it more advanced. This is just an introductory part of market structure. So make sure you watch and understand this one to enable you understand the next video. Bye.